What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 16th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got to do a little bit of a rant and rave over the growing concerns that some people have had over a not only Bitcoin bear market, but also the idea that Bitcoin and cryptocurrencies alike are a failed set of ideas, that the industry is going to collapse and go to near zero. And I really want to spend some time to say that I understand the fears, and I'll explain I understand why people are fearful at the moment, but why a lot of these fears are not justified. And to showcase really at the end of the day what people are claiming is going to happen is still not a bear market, and it is not the end of crypto. Okay, so let's go ahead. We'll dive into it right after our quick sponsor. Our sponsor for this episode is CoinDeal. CoinDeal is a leading cryptocurrency platform that allows you to trade a variety of cryptocurrencies as well as deposit major fiat currencies such as dollars and euros. The team has decided to give away over 90% of their token supply to early registers. So if you register an account before November 12th, you'll be able to claim up to 100 free CDL tokens to do a variety of things such as paying down fees on the exchange. Outside of that as well, it's important to know that CoinDeal has opened up to the United States, allowing users from major states such as Virginia and Texas to register accounts. So check out the link down below in the description if you'd like to learn more and claim your free 100 CDL tokens when you register your account. Alrighty, everyone. So to start off, I want to do something that I think a lot of people don't do when they're trying to prove a point of some sort. And that is starting off by trying to understand the other viewpoint. I genuinely understand to a degree why people are fearful in crypto markets right now. There are very clear things right now that obviously have gone against the bullish viewpoints in the market that a lot of people have had. So let's go ahead. We're taking a look at the Brave New Coin Liquid Index for Bitcoin, and we'll go ahead and take a look over the last few weeks because I think this will provide a clear enough perspective. So let's take it back over the last few months, right? We went from a low of 3,100 back here in December of 2018, almost a year ago, and we've had a massive rally from that point on upwards towards the low around the upper $13,000 range, just a few $100s away from 14,000. A massive rally, one of the biggest recoveries we've ever seen in Bitcoin history, not to mention in the sense of scale, in the sense of the size of the market, it was quite impressive. And outside of that as well, I think it became very clear after this week and the next following week or two that we were entering into a correction. I mean, this weekly candle was a pretty big giveaway. We talked about it on the channel, and a lot of people were confident that, for the short term, that there was a needed correction of some sort. Now, many people thought that it was going to hold at 10,000, but no matter if you saw it as a descending triangle, which is a bearish pattern, or also as a wedge, we talked about on the channel, again, if you were to break below, and to a severe degree, the line of support and break out of the consistency of support, then in that case, we were going to get a correction. And that's exactly what we got, right? Everyone was watching for it. Bakkt was not as successful as many people expected. And that led prices coming down towards the upper $7,000 range to the low $8,000 range on average. Now, the general fears that have arisen from this correction are really three things. The first one being that we have diverged from the average 30 to 40% correction that we tend to get, and we've actually gotten a little bit more of a severe correction, around 44%, right? So we've gone a little bit more further than we tend to have gone in previous corrections back here during the run-up in 2016 and 2017. Another thing that a lot of people have noted is that we have actually been settling below the 200-day for a lot of the trading days. And this is actually the first time in our history of Bitcoin that we have come up above the 200-day after a bear market and dipped back below the 200-day. Okay, so again, first time in history, maybe a good point to make. And the third thing as well that some people have pointed out is that we haven't really gotten a severe, this is honestly, I'd say probably my bigger concern, is that we haven't gotten a severe set of buyers or really a pop-up in price with this 45% discount, right? So those are really the three genuine fears. I bet there's some that I missed, but those are the major ones that I've seen across YouTube, crypto Twitter, whatever it is, right? But let me make something very clear, guys, and this is where I have to really kind of put my foot in the sand and, just kind of really make my point here. For the people who are going as far to say that Bitcoin is entering into a bear market, that Bitcoin and cryptocurrencies alike are a failed experiment, for those simple three reasons, and possibly something else that I'm not mentioning, is downright insane. It's insanity. And the reason I want to emphasize that, and I can dispel it here as we go throughout discussing and kind of revisiting these fears, we'll see just how silly it is to think that these three things alone are enough to confirm a bear market, to go against the tide of the momentum that we've seen not only back over the last few months in the earlier part of the year, but also the history of Bitcoin that has shown that we are entering into the next 4-year cycle, okay? So, first off, a correction that's slightly sharper than previous ones, right? The 30 to 40% corrections we're used to. Why did we see a sharper correction this time around? Well, it might have been, again, tell me if I'm wrong. Again, I'd like to hear from the comments down below if you guys agree or disagree. It could be that going from $3,100 up to $14,000, almost near $14,000 in a few months was a little too much exuberance. A little too much FOMO. And if you guys want some perspective from me, I was very fortunate. I got to travel back over the last few months and stuff, and I got to meet a lot of really interesting people. And for the institutional traders I saw that same sense of FOMO I saw in retail investors. It was this sense of they didn't know what was going on. There was a few big buy orders, and in that case, it continued to funnel into this idea that Bitcoin was going back to 20K next week or in the next month, right? And that can happen in markets. And with exuberant rallies come stark corrections when people have to come back into the realization that it's not going to be that quick and the market is not going to recover that quick. Now, another thing to take into mind as well when you're talking about a correction here, a lot of people say at this price, Bitcoin's dead. And there was a lot of, I think, polls and discussions. People are asking, at what price is Bitcoin a dead project? Guys, if you think 7,000 to 8,000 Bitcoin is a dead project, then you shouldn't have been holding it all throughout 2018. You shouldn't have been holding it down here in 2018 or in the early part of 2019 or any time in Bitcoin's previous history over the last decade. Right? I mean, I hope people understand the arrogance in that kind of statement, especially if you've been investing in that time period. Now, I understand the argument that Bitcoin needs to hold some sense of momentum. It can't come down here probably to 3,000 and set new lows. That would be extremely fearful. But the thing is, for the bears in this market, for the people who are fearful that we've gone below some of these indicators, and I'll revisit the 200-day and things that sort as well. The people who are driving that fear believe at worst that Bitcoin is probably going to go to 6,000. That is not a bear market, right? Bear markets tend to correct 80%. And along with that, that does not mean Bitcoin is a failed experiment just because it might be going to a lower level, okay? Now, to revisit some of these points, the 200-day, right? Let me make something very clear, guys. TA is not only very subjective, I think, as you already very well know. You don't need me to tell you that. But along with that, just because we break an indicator that has proven true throughout Bitcoin's history doesn't mean that Bitcoin is done for. Because one indicator does not prove the sustainability of an emerging financial asset. And along with that as well, there are a ton of indicators that get contradicted. Guys, Bitcoin has less than 10 years of history. So as a project, it's been around for 10 years. It started in early 2009 when it actually was being built out, when the first implementation of the protocol was deployed. But it's only been liquidly traded across markets. And actually, if you really want to talk about liquidity and actually having real volume, you'd really say over the last 5 years probably. But it's been trading over the last 8 years, since 2011. We're coming up here on October, November, which is when we really started to see Bitstamp and a lot of exchanges come up. And that's pretty much the price history we have to work with here, to use these indicators, to use indicators like the 200-day. So I think it's arrogant to go off of one indicator and to say that Bitcoin is done just because it broke something. There's so many indicators that get contradicted, guys. People who are using NVT, all these things that are very respected in the crypto space, and sometimes it doesn't work because nothing is a finite indicator that's going to tell you when it's time to buy and when it's time to sell, and also is going to tell you when something's absolutely done for. No indicator is going to determine that. It is much more rooted in fundamentals that are going, the fundamentals are much more rooted in the answer of determining whether or not something is going to fail or succeed in the long term. And Bitcoin's fundamentals have not changed. Okay, so we've talked about these things. And again, on the third concern here about a pop at markets, right? We did get one the other day. We did get a nice little bounce up, but again, we saw a continued correction. So this really leads us to the possibility that we actually may see lower lows. I've talked about on my channel that it might hover around this $8,000 range. And also as well, I'm open to the idea that we maybe haven't set a bottom and that we might be going to 6,000. But let's go ahead and, just put it all into clarity here, okay? So let's say bullish case scenario. We've hit the bottom and we're setting up for the next cycle, okay? We've had a little bit of a starker correction. Yes, we've been under the 200-day for a few days. And yes, we're not going to get a severe rebound, but we have hit our low, right? Now let's think about the bearish case scenario, right? I think anyone with a rational sense of, understanding here about Bitcoin knows that the probably lowest level we're going to get is on the support line of the historical logarithmic chart, right? And this has a lot to do with Bitcoin's fundamentals in the sense of increasing supply over time. It's a decaying amount of inflation, hence why it's deflationary. And along with that, we have seen historically in this case that we've held along this support line, right? So 6K is something that I think is absolutely rational, not to mention it was a very key level here back throughout 2018. To see a correction to 6K could very well happen. I absolutely believe we could very well see this. Now, what is my point that I'm going to be making? If the worst correction here is to 6K, that does not mean we are in a bear market. It does not mean that Bitcoin is a failed experiment. And most importantly, I'm going to be averaging all the way through. Because for me, as long as it holds on this line of support, right, and ignore these charts and where they lead to. This is just me. I'm basically taking candle patterns from the past. In this case, I'm making a kind of mock-up chart over our next 4-year cycle. No matter what, so long as we're holding on this line, we are very likely setting up for the next cycle. With the next halving coming in May of 2020, right? We have the same mathematical principles that have led to the previous cycles in the past. And Bitcoin itself is continuing to grow as a financial asset across the world. Now, in the sense of fundamentals as well, guys, I understand there's not a crazy amount of headlines right now. The market tends to, when the market is in a correction, it tends to be that the headlines stop. But I can tell you all, let me reassure you, I am deep within the DeFi space, the decentralized finance space, what's been going on in a lot of the interesting and emerging areas of crypto where there's actual value, and there's a lot of exciting things going on, guys. I have some stuff that I can't wait to show you in November that I've been working on for some time. I've been self-funding. There's so much interesting things going on in crypto. We're in the early days, though. It's important to understand, I bring this up from time to time, and maybe this is your first time hearing it here on the channel, and that is that we are in before the dot-com era of cryptocurrencies right now. The dot-com era is a phase of the internet back during the 90s when it was very speculative, not used by many people, in fact only used by a few million individuals across the world. Very similar to crypto right now. We are at less than 1% global adoption, around anywhere from 50 to 70 million people who own some form of cryptocurrencies or have used cryptocurrencies. That's the equivalent of the internet in 1994. So when you see Bitcoin going from 3,100 all the way up to near 14,000 and down to 7,000 or 8,000, it should make absolute sense. We are extremely early on, guys. And that's a really good bit of news here, right? If it means that this is expected to some degree, that we can get these corrections, that we shouldn't be worried if it goes down to 6K, then in that case, we can be confident that we're still on play for the next cycle and that Bitcoin is going to continue to grow. It's lasted for the last decade. So I'm going to follow history here. Bitcoin has been one of the best performing assets over the last decade. Actually, it is the best performing asset. It's not just one of the best. It is the best. And I will take Bitcoin at 6K just like I would have taken Bitcoin at 3,000 and 4,000 back a few months ago. So again, a little bit of a rant and rave. I'm sorry, guys, for I don't know. I like to make the case, and I don't want people to lose faith in something that supposedly they hold a lot of confidence in because some guy on Twitter or some YouTuber like myself makes the claim that it's absolutely done for. Those people are usually driven not only by their own emotions, which is not a good thing to do as a trader or investor, especially not as a trader. But along with that, a lot of those individuals are trying to get you to be fearful, to be emotional, to Stay attentive 24/7. It's not beneficial for me as a YouTuber to tell you this, but I can tell you guys, you don't have to watch every one of my videos. I try not to overanalyze the markets, and I try to keep it relevant for you all, but I'm never going to sit here and say that Bitcoin is doomed one day, and then the next day say that Bitcoin is going absolutely parabolic and it's the next big thing. It takes time for these things to progress. And I would hope that you guys are finding a strategy right now that works for you, but most importantly, focuses in on that long-term vision. And I can't tell you guys what to do, but I've done videos before on my channel on how to simplify Bitcoin investing. Again, not beneficial for my channel because in that system, you're not watching every single video and you're not fretting about every single price dip and every bump up in price. But I don't want you guys to stress. I want to give you guys the tools so you guys can have the best strategy possible to hopefully have the best outcome in the long term. All right. Well, anyways, guys, I've ranted and raved enough today. I hope you're having a great Wednesday wherever you are or whenever you're watching this. And until the next video, I'll see you all in the next one. Stay tuned.